This is the key moment for Bitcoin. Can Bitcoin nullify this head and shoulders pattern, which is destined to drive the price down to 24,000? We're at a critical level right now. The debt ceiling issues continue to play out over in the US. We've also had some interesting data on Ethereum, which has started to decouple from Bitcoin. We're going to break that down and the price targets in the chart. Smash all the likes. Don't forget to subscribe. As always, check out the links in the description if you want to buy or trade any cryptocurrencies. You can do so using Bybit. Links in the description, some amazing bonuses, and also that link supports the channel. Now guys, we've been monitoring this head and shoulders pattern, right? This very important bearish reversal pattern, which will take us from highs of 31 at the peak of the head, all the way down to a technical price target of 24,000. Now, in order to invalidate a head and shoulders pattern, you need to look for a rise above the neckline. The neckline, how I've got it sat here, is sitting around that 27,900, call it 28,000 level mark. We got to get above this level of resistance horizontally in order to nullify this head and shoulders pattern. But as you can see here, over the last set of 4-hourly candles, we started to see some softening, right? We had a nice bounce from 25,000. You can see here, move down, bounce up here, but we're starting to see a little bit of softening here. Are we losing steam? Because if we do, the downtrend can continue. We can continue working towards the price target down here of 25 and then 24. And I've made ample videos over the last few days breaking down how and why Bitcoin could get to 25. We've been calling 25 for a very long time. We were one of the first channels out there saying, even when Bitcoin was here at 31, that a 25 pullback at the weekly EMA ribbon could be healthy. Now, the irony of this is, now that so many people are expecting 25, you can get the opposite, right? That's what happens here in the trading markets. You've got to be very, very careful. So what we're looking for that is if we can get back above the neckline, that then gives us some relief. In order to nullify a head and shoulders pattern, get above, retest to the top side, and get yourself working. We've spoken at length yesterday and the day before that even then the work is not done. Bitcoin has to get above 30, it has to get above 31 in order to nullify the bearish situation. Okay, so that's what we're sat on here on Bitcoin. Very important level. Do not get caught out on this. A lot of people are getting excited because we've had this move here from 25,900 roughly all the way up here towards 27. They're getting excited and they're thinking, oh, the bearish scenario is gone. No. We spoke about that yesterday. The bears could be setting up for a bigger trap. They're taking a little breather before trying to push it down. The only time we can get excited is if we get back above this neckline. Very, very important. Now, if you want to look at this from a different structure, you can also look at it from the horizontals, right? If you look at the horizontals that we've been working with, we know this dotted yellow line at 27,700 roughly was very important support. Look how long we were clustered around it in this period. We held it as support here, and then we broke down. Then you saw we collected support at 26,200, and where did the rally take us? Right to the dotted line before getting rejected. Okay, so again, we've got to show some strength here. Bitcoin's got to show some strength and really work up toward 29 and beyond in order to nullify this. It needs to get out. This is not enough. This is just the bears calling off before a bigger push to the downside. So you don't want to get caught on this leg. Okay, that's the last thing you'll do. Never get caught in this leg and punished on this leg. Caught on this leg, punished on this leg. Okay, the trend continues to be here to the downside. We've got to respect that trend. Now, interestingly, there's been another development, and that development has been that Bitcoin's correlation with Ethereum has continued to change. Now, ever since the Shapella upgrade, we've seen that this has weakened from 96% correlation to 77%. It's the first time it's dropped below 80 for a very, very long time. In fact, since November 2021. Now, this means something important. What this now means is that the landscape could be changing. Remember, we've been speaking about this notion that when are altcoins going to decouple from Bitcoin? I mean, historically in Bitcoin, you see altcoin seasons, but you've never had the maturity of it completely decoupling. Could this be the early innings of us seeing exactly that? Through ETH 2.0 and the Shapella upgrade and Ethereum moving from proof of work to proof of stake, Ethereum has started creating its own image. It's no longer being as deeply correlated to Bitcoin as it was previously. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube, everything is about retention, whereas with a course, you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. Bitcoin would go up, 96% correlation, Ethereum would move in the same direction, the same to the downside. Now that dynamic is starting to change, and this is not insignificant. 77% correlation versus 96% is a big change, and you can see that in the chart. It's a big change, and that's fundamentally happened since the upgrade and since it's moved across to proof of stake. So what we could now be seeing is that Bitcoin is continuing to hold its status as this, reserve, secure asset where people want to put their money. And you're seeing Ethereum being treated more as your fast growth company, kind of like a company in the NASDAQ, right? Considered like a Tesla or a fast growing company like Apple or something, or an Amazon, right? It's being considered as a big market cap growth like stock. And that is what we're starting to see here. Bitcoin's being treated as commodity. Ethereum is being treated more as this utility-based platform, which it is, right? Secure, it's smart contract-based platform. So we're going to have to watch, how does that play out? And one of the interesting example you're seeing is today. Bitcoin down 0.4%, Ethereum slightly green on the day. So if you look at the ETH BTC pair, you're seeing a green day. But overall, what have you been seeing? If we zoom out here on this ETH BTC chart, you're seeing we've been in a downward trend. Right? Ethereum has been underperforming Bitcoin here in this downtrend since August of 2022. In fact, if you take it from the peak down here to where we're at now, you have seen 22% underperformance versus Bitcoin. Now, of course, that can change, but you want to look for this breakout, right? A lot of people I've seen make really good money rotating from Bitcoin to Ethereum. I personally don't do that. I personally like to keep my positions. So if I look at my portfolio, I always want to make sure I've got the anchors of my portfolio. And I call that Bitcoin and Ethereum. And they keep the percentages in my portfolio, and I make sure I keep it at those percentages. Other people like to play this rotation game, where they see, okay, I think Bitcoin's going to outperform, and so they move all the Ethereum into Bitcoin, and in this case, they would have done really well. But then, if Ethereum breaks out, right, then you want to be in Ethereum. You don't want to be in Bitcoin. So that's something that some people do, is rotate their funds across. I think that's really risky. I think that's you attempting to time the market. And unless you're very experienced and a bit lucky as well, that's going to be difficult to do. But definitely something to keep an eye on here is this relationship between Bitcoin and Ethereum. The wider decoupling could be a huge watershed moment for crypto, right? It could be a really big moment for crypto where we say, hang on a second. If Ethereum is now commanding its own respect in the market, it's not just considered as the other crypto after Bitcoin, right? Which is what it was. If you guys were early enough into crypto, you will know that it was Bitcoin, and then what was the other thing? Oh, look, there's Ethereum. We'll go invest in Ethereum because it's the other one, and Bitcoin's already quite mature, right? And then altcoins became that thing as well. But soon you'll get to this point where they all carry their name of their own. And you can see that Ethereum has been around for long enough, and with ETH 2.0 and the maturity of the platform, it's trying to stand on its own two legs, not just being the other crypto to Bitcoin. And so it's going to be interesting to monitor how that plays out. Now, back in the charts here, of course, Bitcoin is still breaking down from this symmetrical triangle, same as the patterns I was showing you before. It's got to work its way up here. It's got to get above this pivot point, okay, above that 28,000 level, and then get above the apex of the triangle, which is 28.6. Until then, right, you got to keep that 25 level in your head, or at least I am. Right, we're below our daily EMA ribbon. That's going to act as resistance to the top side. And you've seen that. Look how we wicked down yesterday. Right, this is going to continue to act as resistance. So then if we zoom out to the weekly chart as well, you see here exactly why I've been saying 25 is okay. Right, have a wick down to here, just like we did, and then try work our way back up. Where it gets scary is if we lose our weekly EMA ribbon. Anything below 24,800 on a weekly close, and then we've got more to worry about. But until then, this is a nice pullback. And these pullbacks are where I want to be DCing into. I do not want to be chasing at 31. I want to be buying on this wick here at those lows of 25,800. And fundamentally, if you're able to do that time and time again, I mean, look at the saving you're making there if you get that wick to wick. It's a 16% difference. It's a 16% difference in the DCAs you're making. So if you can learn to do that over the long run, you're going to get a really low cost basis in your portfolio. And that's what's going to make a difference when we get to the next bull cycle. Of course, we still need to worry about the US debt ceiling, with the politicians continuing to play chicken, and they're going to continue to do so. They're going to take this right to the wire. And of course, this is going to affect markets. Be very, very careful. Markets will be volatile. Here was what Janet Yellen had to say yesterday. She said, we're waiting until the last minute to suspend or increase the debt limit can cause serious harm to business and consumer confidence, raise short-term borrowing costs for taxpayers, and negatively impact the credit rating of the United States. In fact, we've already seen Treasury's borrowing costs increase substantially for securities maturing in early June. So this is going to continue to play out. They're going to keep negotiating. It's a political game. And at the end of the day, the markets have to react. The markets will have to react because they're going to make the markets react by leaving it to the umpteenth hour. And that's how this game goes. So until it gets sorted, until they raise the debt ceiling, expect that volatility in the market to play around with the positions in the market. Of course, Bitcoin is at a critical level, so it's not ideal. We need Bitcoin to work its way upwards and get above 31. That's when the fund's really going to get started. And that's when we're going to enjoy the movements on the price action. Also worth looking at the dollar index. Remember, the dollar index is inversely correlated to crypto. We need this to continue to move to the downside. And you can see here on the weekly chart, it is opening up this week red, but the week previously it had a big rallying week. That's a big candle for the dollar index there. You can see that's a big week. But again, it's running into its weekly EMA ribbon. So we've got this on our side. Bitcoin is above its EMA ribbon, the dollar index is below its EMA ribbon. So unless that flips, unless Bitcoin gets below its EMA ribbon and the dollar index manages to do the unthinkable and get back above its EMA ribbon and bounce and move onwards, then that's going to spell a big down period for Bitcoin. But until then, as long as we can reject the dollar index here, send it for another leg to the downside, that is going to be important. One more thing I did want to show you here on the Bitcoin chart is that we are coming up to a crucial level on our moving average. So if you pull out the basic 200-week moving average, you can see that, again, we are coming in to test that. Again, a very important support line for Bitcoin. We do not want to be losing that. And that currently sits at 26,200. Very important level. We need to hold above it here on the weekly candlesticks and bounce, get above 31, and keep our momentum to the upside. So there you have it, guys. Let me know how you navigate in this market. Are you DCAing just yet, or are you waiting for lower price targets? That head and shoulders pattern is crucial. If we can't get above that neckline, I am sitting back and waiting for that 25 and maybe even lower to play out in the charts. There's no need for me to chase green candles. I don't feel like we're just suddenly overnight going to get above 31. This is a tough level in the market, and the bulls and the bears are at stalemate. Thanks for watching, guys. Don't forget to go watch this video on meme coins here, and I'll see you in the next one.